Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. As always, we'll start with a little bit of EVE Online news, and for me, two items did pop up on the EVE News website. So on the EVE Online website itself, if you want to read them for yourself. First of all, GM Week is coming back, and that's always nice because on Monday we'll get Whack a Bot. That's a special event where CCP teleports bots into a high-sec system for you to destroy, so they'll be suspect and you can just start blasting them. Definitely an opportunity if you want to get on some large kill mails for some large ships, maybe even Titans. That is pretty unique, a pretty unique way to do that because you can do it from high sec. So that's pretty cool. The other one is the monthly economic report that already dropped for the month of August. So they're definitely getting pretty fast, and I think they'll have like automated a lot of that process at this point. And there's got some improvements there as well with the dark mode. That's far better to read, and then some extra data points as well, like the ISK distribution in the game. Well, the velocity of ISK is not looking all that great, but I think everyone knows at this point that we are definitely a little bit in a slump for activity. So I'm definitely still looking at the next patch for EVE Online that should be centered around faction warfare and all of those events, with the storyline that is slowly developing, but there's definitely stuff happening there with, I think at this point, both Galente and the Kaldari building up a gate, probably going to become one of those player choices, but we'll have to wait and see what CCP decides to do. Next up, we'll take a quick look at the New Eden store as well, and I think we'll be ending the Kaldari celebrations, but their new skins are still front and center. And if we take a look at the services, there are no sales going on at the moment, despite, I would say, potentially CCP needing to take a look at what's happening with plex prices. But more on that in just a moment, as we'll take a look at plex and pilot services coming in at 215. Like that. And let's get started. You may already have seen that on the ticker as well, but plex has gone up to 4.7 million for the sellers in Jeddah, almost 4.5 million for the buyers in Jeddah. And if you take a look at the Tranquility Trading Tower, we're just below the 7 million mark for those sellers, and we go to that 4.5 million mark as well for the Tranquility Trading Tower. So it really doesn't shift all that much, but you can see on the chart here that over the last 10 days or so there was a little bit of hesitation as plex went crazy, as quite a few of you guys actually mentioned in the comments as well right after I made EVE Talk. So we shot up to well above 4.5 million all of a sudden, a little bit too quickly for the market to absorb, so we had to give back a little bit of ground, but the upswing is still here. 5-day moving average above the 20-day moving average, and you can see that for today already the highest price, the max price, is probably starting to head back up once again. So definitely super expensive plex at the moment, and well, we all know that the main reason for that is the fact that CCP decided to increase real life costs for plex and pilot services in general. And so while supply has gone down substantially, demand probably has gone up a little bit as well. If lots of people might want to plex their accounts now that it's worth a little bit more real life cash, and as a result we've got this super high price for plex that's probably going to translate through the rest of the pilot services, which you can see that right here, the multiple pilot train certificate also doing a bit of a jump up to 2 billion ISK almost about a week ago. A little bit too much too fast yet again, as we are starting to head down, but you can see we basically opened up a pretty healthy gap between the 5-day and the 20-day moving average, so the general uptrend is definitely still running. Almost 2 billion for the sellers, almost 1.9 billion for the buyers as well of multiple pilot train certificates. I think I mentioned that last week or 2 weeks ago. I didn't think that this one could lag behind all that much longer behind what was happening with plex, and so you can see that both of them had a little bit of a shock with plex first and then the training certificates next. That's trying to rebalance everything to where the market thinks things will stabilize at, with which is very expensive, of course. Skill extractors should follow Plex, and yes, they do. You can again see that about 2 weeks ago we got that price shock when we hit 550 million ISK on that maximum price. Again, a little bit too much too fast, so a little bit of a break over the last 10 days or so, but at the tail end we can see that the min-max prices are starting to diverge again. 20-day moving average, 5-day moving average, so I think the uptrend is back. We're talking 529 million for the sellers and 520 for the buyers. This does show that there is this demand for the free under brackets pilot services as well from players that are playing the game but are not willing to pony up the dollars or the euros for the Plex and for the subscription. The impact on the injectors here are the large scale injectors doing a little bit of a more of a seesaw movement here as well. Broke 850 million, which I think was a little bit too much for the market at the time, but you can see that it's coming into play yet again in the last couple of days, with granted at the tail end a little bit of hesitation and 5-day moving average heading back down. So 850 million still for the sellers, 812 for the buyers. That's probably a little bit of a gap that's opened up where buyers are not willing to go 825, 830, even 840 for those large scale injectors. So there is definitely a limit to how high prices can go, but at the moment I would say we're starting to head into that price discovery phase, and if we look at what Plex is doing, we might not be there just yet. The small scale injectors, surprisingly enough, a little bit more stable on the chart than the large scale injectors. It's usually the opposite, where the large scale injectors have a more steady pace in whatever direction they decide to take. Small scale injectors being smaller and basically a division of those large scale injectors tend to do their own little thing. You can see that here a little bit more jittery, a little bit more steep as well on the chart, but in the last 2 weeks or so, basically flat, with just at the tail end again 5-day moving average crossing 20-day back on the upside, and that maximum price starting to head up with today's average above 170 as well. 173 million for the sellers, 162 for the buyers. So again, bit of margin opening up here, but I do believe that we still are seeing generally upwards pressure in these pilot services. For the daily alpha injector, we are stopping the increased price at 70 million ISK, another pretty, I think, important round number that psychologically the market might decide to not just go straight through and even higher. Let's not forget that 50 million was considered to, in my opinion, almost a too higher price for the daily alpha injectors, which you can see that here once and twice a clear CCP intervention doing a sale to bring the price down from that 50 million to around 40, 45. Everyone's happy. Definitely a daily goal that an alpha player can set himself. 70 million on a daily basis, that's definitely a much taller order. 69.5, so practically 70 million for the sellers and 63.2 million, so pretty narrow margin there in my opinion. It's like 6 million, 10%. That's actually a reasonable margin, maybe a little bit small but not too drastic, but it does show that there is this strong demand for the daily alpha injectors, and heading towards 70 million on a daily basis, though pretty hard to do, as you can see that the volumes are starting to take a beating here as well. And then finally we've got the hypercores that are also starting to hesitate. I think price discovery here is starting to play a role in general, as we head above 500,000 ISK, and that's again maybe a little bit too much for the market to bear. We're down to 486 for the sellers, 451 for the buyers. So a little bit of probably speculation, some investors that decide that, yeah, sure, hypercores at 500,000, excuse me, would be a little bit expensive and extreme, but yeah, 500,000 ISK. Let's start to maybe unload some of those investments, try to take a little bit of profit. Looking at this 1-year chart, they're definitely right to do so. Same thing with those daily alpha injectors. As we head towards 70 million, sellers decide, well, if I bought for maybe even below 40 million during one of the sales, that's a pretty damn good profit margin. Let's try to take it, because this is a pretty steep acceleration over the last 2-3 weeks as well. And so I think that's what's happening, which is also pretty damn normal. 1-year high points and then a little bit price discovery, and thus some hesitation. But in general, I would say Plex is still, I think, on those maximum prices trying to trend back up. Next up, we've got the mineral market coming in at, well, let's say 10 minutes round, or 9:55, just like last week. That'll do as well. As always, we start with titanium. You can see that's a pretty bad min-max chart for today, so there's definitely still a bug in that. But we're basically sideways for the week with a slight uptrend at the tail end here, but also coming from a slightly below average price. We're talking absolutely pennies on the dollar here, because titanium is only at 373 at the moment for the sellers, 363 for the buyers. And what worries me is still that you get 2 billion here, 2 billion here, another billion units, another 800 million units. So you still have those really big supplies, and you get a couple of big buy orders. They're defending 350 quite heavily, so I don't see titanium head below 350 at this point. There's enough construction and industry going on to keep titanium from breaking that price point, at least for now. But there's plenty of sellers as well that are dumping very large amounts of titanium, and that will mean that the margin is pretty low between those sellers and those buyers. Let's see if we can find something else in the pyrite market, for instance, again with a very bad min-max price, but also up a little bit for the week with at the tail end hesitation, so probably more volume coming in here, and we can see that here 880 for the sellers, 795 for the buyers. So again, pretty narrow margin between sellers and buyers, but the fact that those buyers are below 8 is not that great. In fact, in GDA itself 790. And then again, 300 million at 903, 100 million coming in at 882. That's quite a bit of pressure from supply. So I would not be surprised if we do go a little bit lower over the next week or so. And you can see a couple of months ago, in April, May, we have tested 750 before, so that'll probably be defended, but A-disc, a little bit of a tall order at the moment with buyers going below 8 for pyrite. And then we get the Mexalon market. That one is going back up. That's actually pretty impressive. Right at the tail end there, going up to 68.2 for the sellers and 64 for the buyers. Again, that narrow margin is there. Some supplies are coming out though, and we are hitting into that 75 million units. So there is this ceiling because of supply for prices to correct. And here we get another 26 million units that's coming in at 68. So whenever those prices go up, that is the unfortunate story for those high-tech minerals. The supplies do come in, and whenever it goes up, it does tend to basically bounce into some of those really big volumes, so it can't break out massively to one-year high points, get back above 75 or anything like that. That is not on the cards at the moment for the high-tech minerals, but from time to time at least there is strong enough demand as well to keep the margin low and to bump into those big volumes. But yeah, we're oversupplying very quickly every single time that we do that. Then we've got the isogen market, which is trending down back below 400 disc by a decent margin. We're talking 376 for the sellers, 360 for the buyers, with again a very narrow margin. There is demand, but there is plenty of supply as well, with potentially some speculators, in my opinion, still selling as well. 10 million here, 10 million here. I think, again, let's take a look at the... So that's 86, that's a couple of hours. No, so this is not necessarily from the same players, but I think we saw that last week and the week before. There was definitely a structural selling of some old reserves that was happening in smaller batches, which is smart, of course, because that means that you have a better chance of riding the up wave, but they're still here. And at the moment I would say that there's probably the lower activity in general that's also putting pressure on isogen, because if I'm not mistaken, Noxium, that had already given quite a bit of ground over the last 5-6 months, is doing the same thing yet again, going even lower. 770 pretty much for the sellers, 740 for the buyers. You can see here buyers going below that 750 mark as well, opening up a bit of margin. So demand is dropping a little bit, I think, for those low-sec minerals, perhaps during the boom here from January to April with the very best prices. In fact, Phenoxium, highest prices at the time in all of the Tech 1 minerals. Then we might have just built up enough reserves that now at the end of the summer, with the activity as low as it is, we basically have a little bit too much. Then for nullsec, we've got Zydrine that's also starting to break a little bit, although staying above 2000 disc is, I think, historically something that was very difficult for Zydrine to do as well. But now we get a little bit of structural pressure going straight through the 2K mark. 1837 for the sellers, 1739 for the buyers. Bit of margin opening up here as well. 2 million, 2 million, 2 million. Well, no, yeah, maybe those two orders together. And you can see here the buy orders. 300,000 units, 200,000 units. So it is a bit of a demand side that's starting to slink, I think, that's starting to diminish on the mineral front. And mega side still pretty damn flat, but also relatively lower compared to Zydrine, still above 1500 disc, 1620 to 1538. Bit of margin opening up here again as well. And look at those volumes: 5 million, 2 million, a million. Buy orders 18,000, 150,000, 500,000. So there is definitely something happening on the demand side, it looks like, for minerals. Except for high-sec, those margins are remaining pretty low. Then finally, we've got the Morphite markets that went up over the last 10 days, but you can see at the tail end, definitely on those daily averages, pressure is back here as well. 42,800, almost 900 for the sellers, 40,000 for the buyers. They're still above 40k, so that's still pretty damn nice, I would say. Pretty narrow margin, showing strong demand, but how long will it last? That's a good question. We got one buy order of 870k units. Everything else below 30,000 pretty much on the front page, except for this one all the way below here. So I am personally seeing some mineral demand drop off quite substantially, a bit to my surprise, including or maybe even starting in the low-sec minerals. Next up, we've got the PI market that's coming in at, well, let's say 17 minutes. Like that. And as always, we start with the broadcast nodes with demand dropping off for minerals. Let's see if the same thing is happening for our PI materials. I'm expecting that to happen at some point. And here for the broadcast nodes, well, the daily average is still up well above 1.5 million. What I am noticing on the chart though is look at those minimum prices. They are starting to drop off right here at the tail end. 1.6 million almost for the sellers, almost 1.4 million for the buyers. I think that's down though on these buy prices, so let's be careful. The first signs, I believe, are here. Here are the construction blocks. While we are playing with 1 year high points well above 10,000 units, look at today's daily averages, dominated at the low end below 10k. 10.6 for the sellers, 9.8 for the buyers. And well, considering these average prices though, so while here you can see we're dominated at the higher end of the scale, right here at the tail end, we are now dominated by trades happening to the buyers to those lower prices. So again, starting to potentially see a shift here, whereas coolants though is sort of belying that, again going up substantially well above 10,000 disc. It's still great prices, almost 11,000 for the sellers, 10,250 for the first few buyers. So here coolants still doing really well with very high prices, and even seeing those minimum prices pull up from 10,000 disc, pretty impressive. Enriched uranium next, a little bit of a smaller markets here again at the tail end. Look at that, I am seeing those minimum prices try to get back below 10,000 disc. 10,730 for the sellers, quickly getting to 11,000 disc, although this is 57,000 units as well. That's a pretty big sell order. And then those buyers, 10,000 for the first one, and then 9,750 for the buyers. So it's still a strong market, but the first signs of weakness, I think, are starting to creep in here. Integrity response drones still very comfortably above 2.5 million, 2.7 for the sellers, 2.6 for the buyers. Hardest to make, definitely in demand as well, and as a result, very, very expensive. Definitely something that if you're producing this, I think you're very happy. Then we've got our mechanical parts that's also coming down for the week, but considering we're coming down from a price above 11,000 disk, that's still all quite relative, but things can go fast if we look at today's data points. 10,000 for the sellers, 9.7 for the buyers, and again in the last couple of days you can see that the daily average prices are at the lower end of the scales below 10,000 units, which means that there's fewer people buying from the sellers and there's more people selling to those buyers. Miniature electronics seeing a little bit of pressure as well, coming again from a 1-year high point, so this is not that bad. 13,000 for the sellers, 11,000 to the buyers. Still a very strong price for a refined PI material. But again, we're not continuing to build up even more strength here. So I do think that fall might be a difficult time for PI. Advanced Nano Factories seeing a little bit of pressure, definitely not the best in volumes. We're talking almost 900,000 for the sellers, 850 for the buyers. That's still a narrow margin though, so that's that might be that there's still strong enough demand to keep us a little bit in check here. But for the last couple of months again, and especially the last couple of weeks, I think a little bit of downward pressure is starting to show. Organic motor applicators pushed up above 700,000 discs. So again, it's all quite relative, 750 to 710. Still a narrow margin here between sellers and buyers. Recursive computing modules going for 840 for the sellers, 800,700 for the buyers as well. They are back above 700k. So for large ships, for advanced PI materials, I would say there is still pretty strong demand. Maybe structures as well are a part of what's being made here, because those margins are really narrow. Then we get robotics. Well, that's starting to be a little bit different. Again, away from the 1-year high points about 10 days ago. Still 74.5, 75,000 for the sellers. That is a very good price considering the full 1-year chart. 72,000 almost for the buyers is a pretty narrow margin. But what's starting to worry me a little bit is 20k, 12k, 30,000 units here. Got a couple of big buy orders that are coming in at 20,000 units here. So yeah, maybe not really the time to panic actually for robotics. Now that I look at these two buyers, if they were gone, then I would say might have to be a little bit more careful, but they're here, so they're definitely, you know, making up for a lot of that supply. So all right, still doing a little bit better than I expected. Rocket fuel, again, 1-year high point at 13,000 disk. That's pretty damn good. A bit of pressure from there is quite normal. 11,672. Well, buyers below 11,000 disk coming in at 10,900. Self-harmonizing power cores, flat, and actually seeing max prices go above 2.2 million, 2.26 for the sellers, and almost 2.1 million for the buyers. So that's again advanced PI material actually on the upside, more volumes, more demand. Then we get our smart fab units that are above 60k. Volumes are really bad for this one, so it's a little bit all over the place, but 65,000 to 54,000. Yeah, lower volumes, way bigger margin. This one can really go anywhere from here. So if we do expect demand to drop off a little bit, we could go to below average prices. But again, for this week, still pretty damn strong. Sterile conduits, advanced PI materials, and that one is up to well above 1 million on average, 1.4 for the sellers, and above 1 million for the buyers. I would say this looks like a shift. This might be a shift from the more basic products like coolants, construction blocks, etc. to some demand focusing on the advanced PI materials, because all of these have really narrow margins, and we're starting to see some upwards pressure here. Even supercomputers are going up a little bit. Sellers above 100,000 disk, buyers though again lower volumes, 74,000, so these are hesitant to follow suit. Synthetic oil going back up above 8k as well, 8.6 to 8,000 disk. That's actually a little bit of a different story. You can see again we got a decently spiky chart with big spreads between sellers and buyers. That's because the volumes aren't that great on synthetic oil, but I would say the closing of the gap between sellers and buyers on an upswing and buyers coming in above 80 8,000 disc with 30k here, 30k here, 20k here. That's a lot of demand that's showing up, and so synthetic oil is actually up in price, up in demand. Not really sure why, but this is counter to my expectation and counter to the trend in other refined PI materials. Synthetic synapses, yeah, flat but still pretty expensive. 92,000 for the sellers to 84k. So a bit of pressure coming from this high point, but overall strong demand, strong price. And so if you're looking to invest in synthetic synapses because you are hoping for a chance to buy low so that you can sell higher when something happens around implants, it's pretty difficult market to actually get that going. Transcranial microcontrollers, yeah, going up in price. Is something happening here with the Caldari event? I suspect so, because this is quite substantial and going up in price from, well, a relatively high price point at 86k as well, but up to 107,000 for the sellers, 91,000 for the buyers. Definitely a bit of a supply shock that's coming in here, or maybe even a demand shock because of higher demand. You can see that here as well. Those volumes up to a pretty high 100,000 a day now. Water-cooled CPU, that one is low in volumes and still flat below 5k, so that's not breaking out. 49 to 4150. And finally, the wetware mainframes, which last week were under pressure. Look at that comeback very quickly. The market is grabbing every cheap advanced PI material that is available, and we're now at 1.6 million for the sellers, and look at that, 158 million for the buyers. So I'm seeing a few signs of a little bit of weakness in demand in some of the more basic refined PI materials, but definitely super strong demand and very narrow margins in the advanced PI materials at the moment. Let's move on to the advanced moon materials, 2640. Like that. As always, we start with the carbides, and I'm gonna take a quick look here. So I've got some photonic metamaterials that I bought below 7k, but I did two trips to Jeddah last week to look for more investments. Honestly, couldn't find them. So let's see if those trends were still or are still alive. First of all, Galente with crystalline carbonite. They are, yeah, a little bit of pressure again. So over the last couple of days, you know, we're seeing some downwards pressure, but is this the time to buy? If I look at the full chart, I'd say not yet. 102 to 95, definitely like an in-between price, not a one-year low point, not the best time to sell. What is quite noticeable is that after we gain some price, supplies do come in to take advantage of that. So actively selling and buying is happening, and a full breakout won't be easy to materialize, but I do expect as well that things will dry up now that we're back below 100 on average, and so I think the real buy opportunities, they're probably over. For Caldari, it's titanium carbide, same story, right? When above 150, supplies coming in, pushing us back down to 139 for the sellers, 134 for the buyers. But yeah, stronger demand. We're definitely seeing a little bit of a narrow margin here despite the pullback in price. Then for Minmatar, it's Fernite carbide. That's today's data points not looking that good, although we were at 100 disc. 103 for the sellers, 94 for the buyers. So again, one-year low points, definitely not. So the real buy opportunity is probably over, but buyers are still below 100 disc. So you're still grabbing relatively cheap Fernite carbide, but I would say you might be waiting a while to grab a buy order, especially if you look at this chart, and then turn a profit on what you're buying now compared to, you know, a real buy opportunity at a one-year low point. For Amar, here is tungsten carbide staying above 125. That's actually decently impressive. 132 to 126. Again, narrow margin. The demand is here, and clearly May to July were the better months to jump in. Then for our meta materials, Galente first. Here is photonic meta materials, which is also my investment. Bit of a bump being plugged very quickly. 7.7 for the sellers, 7.3 for the buyers. So remember, I bought 7,000 discs including taxes. So we're definitely already at a higher price than that. So I bought, I think, right at the correct time. But it is the same story. You can see even a data point above at 9,000 discs, but supplies are there to take advantage of these better prices. The question is, will you be able to buy photonic metamaterials below 7,000 discs again? Yeah, I think those days might just be over. At least over the last week, we didn't see it. Then for Caldari, it's non-linear meta material, seeing a bit of pressure. That again looks actually pretty interesting, although over the last few weeks we were up here, so 12.5 and a little bit below, but now 11,500 and still almost 11,000 discs at 10.9 for the buyers. That's a little bit too much for me. If we could break that trend and get closer to the 10,000 disc, I'd consider jumping in, but I think including taxes, even here you won't be below 11,000 disc. That would be my attempt. Try to buy just below 11k. I think there is some profit potentially in that if I look at this 1 year chart, but I don't think we're there just yet. Then we've got Minmatar, which is plasmonic metamaterials, back on the upswing, and this here, yeah, below 10k. Not exactly a downward chart with a good buy opportunity, which is why I didn't make a move. Big volume change all of a sudden yesterday though. We are talking 13,760 for the sellers, 11,630 for the buyers. So while 10 days ago, 2 weeks ago was actually a good jumping point considering what's happening right now in plasmonic metamaterials, I never pulled the trigger because we didn't see the chart go below 10,000 discs. So could have done so. You could definitely have grabbed a little bit of profit, but my horizon is a little bit longer than a Twitch trade like this. I'm really looking for those very best investments and then to see like maybe even 15k or something like that. And then I would love to buy below 10,000 discs for this. So yeah, terahertz metamaterials for Amar finally very flat, still below 10,000 disc though. 9.8 for the sellers, 9.7 for the buyers. If you're really looking for something to jump into, terahertz metamaterials might still be the ticket, with unfortunately a chart that won't be that easy to grab something from a buy order. But overall, yeah, if this Minmatar one is any indication, I think bottoms might be in. At least that's been my gamble, and I bought the Galente one. For the others, yeah, looking back, of course, should have bought some plasmonic last week, but I came and looked, never really decided to pull the trigger based on the charts. For the other advanced movement, I think those are actually pretty important here as well to try to gauge the trend. Potentially, are we indeed starting to form a bottom? And fermionic condensates is definitely belying that, with testing another 1 year low this week, 35,720, so below 36,000 for the sellers, 33,150 for the buyers. Not a great chart. Then we get ferrogel. Okay, that's really not a great chart. Another 1 year low point, 15,900 to 10,000 ISK for the buyers. Buyers are just gone for ferrogel. Next we've got Fullerites. At least it's not a 1 year low point, but the pressure is back. Does show that there's a lot of supply. Hypersynaptic fibers went back below 5k, 4,750 to 4,700. A little bit of demand, but this can evaporate very quickly. And then we've got nanotransistors. All right, not a bottom price, but again, I think we can see pressure over the last 2 weeks. Phenolic composites, yeah, that's close to 1 year low point. 900 for the sellers, 850 for the buyers. Pressurized oxidizers holding on a little bit better. Probably the same for the reinforced carbon fibers. yeah, holding on a little bit better. So 6250, we've played with that a little bit, couple times. 7150 as supplies are dwindling. 66 for the buyer, still a decent margin. And finally, ceramic fibers that are also landing on 200 disc, going back up just a touch, 230 to 211. That's a little bit of buying as we touch 200 disc. Some investors are watching this market as well, but overall, this is not good news for me that's looking for signs of a general bottom in advanced boom materials. So maybe it's a good thing that I didn't buy last week, and I think that below 7k for the one that I did buy is a very pronounced 1 year low point. But in general, for advanced boom materials, any increase in price gets filled very quickly with supply, with desperate sellers that want to get a little bit of risk for what they're holding. And especially the other advanced materials, a few more 1 year low points could be potentially investment opportunities if, like me, you do expect this to turn around eventually. But at the moment, we're just definitely seeing a lot of pressure in the advanced moon materials. Next up, the Tech 2 ship market coming in at 34.55. There we go. And let's go through the list on this one. Same story. Basically, we're looking for is a bottom forming, and Basilisk is definitely not doing that. So over the last week, one thing I was considering was putting in a buy order for the Basilisk, but I think right now would be the better thing to do. Look at that daily average, well below 5-day moving average, everything trending down. 1 year low point, we're playing with 100 million, 108 for the sellers, and that's the unfortunate part here. Buyers still a little bit aggressive for my taste, still above 100 million at 101, but you're definitely buying super cheap basilisks at the moment. Then we've got the Cerberus that did a little bit of a jump back to 150. Same story as with the advanced moon materials. Unfortunately, if you're looking for those higher prices, look at that. 10, 16, another 10, another 22 coming in, down to below 130 million for the sellers, 124 for the buyers. Bit of more demand that has shown up here, but in general, still massive pressure. Even on any increased price, it just floods in the amount of sellers that are available. Then we've got the Curse, able to maintain that well below average price point on the 1 year chart, but away from the bottom that went below 130. We're at 134 to 125. So you're still buying close to the bottom. You can also see that on the minimum prices, but it's harder and harder to actually get a buy order there to trigger. The Damnation, kind of the same story, except a little bit of pressure at the tail end, 5-day back below 20-day moving average. So here we're talking 268 to 255, definitely seen it lower. Then we've got the Deacon, bit of volatility, went up to 30 million on a couple of days, is starting to come down from that, 26 for the sellers, still 19 million for the buyers, so big margin opening up here. I do think by next week that we can expect this to be plugged very severely by supply, but this is still also in line with my personal expectation. If you were still looking for trades and for potential volatility in Tech 2, well, it's a frigate, so those smaller ships are the better places, in my opinion, to place those types of bets. For the Eagle, back under pressure, close to 1 year low point, not yet there, right? We've touched 100 million before, 127 to 118, so that still has a little bit of a ways down. But you can see that supply could dry up, although there is slightly more aggressive buying happening at the moment. The EOS, seeing pressure here again as well. Today's data point especially is worrying. 241 to 220 million. I already have an EOS bought for like 254, I think it was. So I'm good. I definitely plan to fit it and to fly it as well. You can buy even lower at the moment. Next we've got the Ares, flat away from the bottom, but really 36 million for the sellers, and look at those volumes still coming in, 29, 58, 19, 28. That should put some pressure on there. 29 million for the buyers. They're already below 30 million ISK, so that's quite reasonable, but this could go down to yet another 1 year low point. Flycatcher doing just that, especially are those minimum prices, at least here, looks like they were below 35 million. I think we've caught up at this point, but yeah, 35 million for the buyers, 39 for the sellers. So lots of pressure, very cheap flycatchers. Love the ship myself, especially for some events. Tech 2 Destroyer can actually run some events quite nicely, and here shields, missiles, great ship. If I didn't have a couple already, I would probably want to buy one just so that I can fly it as well. Then we've got the Guardian, yeah, 1 year low point here. Look at that, we're touching 100 million again. 110 for the sellers, 103 for one buyer, 101 for a couple. And then if we would go below that, we're at 91 million for those buyers. So massively oversupplied, a little bit of demand dropping off. Heretic doing a bit of a spike at the moment. So you could probably have bought them easily below 30 million. Yeah, buyers are in fact below 29 million, but sellers now at 37 million. It's a destroyer, it's a little bit smaller, slightly more volatility. Definitely a small trade that you could have made here as well. Then we've got the Hound, back below 15 on those minimum prices. That starts to look juicy. Unfortunately, someone is spoiling the party, although I couldn't blame you. That's exactly what I do as well. This is probably like a buy at 15.5 or something like that after taxes. 16,260 for the buyers, 15,200 for one buyer. Then we're below 15 million. Hounds below 15 million is definitely really good. Something to consider. Smaller ship as well, and you can see the volatility here. 1, 2, 3 sell opportunities above 20 million. 15 to 20, 30%, definitely not bad. Then we've got the Ikitursa. Yeah, flat for the week, hesitating to really go much lower in the last couple of days. Still 473 to 442 million. That's pretty cheap on the 1 year chart. It's still very expensive, of course, for a Tech 2 cruiser, but yeah, it's Triglavian for a reason. Then we've got the Ishtar, back below 130. In fact, sellers 122 million with 49 units. So I think here a bit of patience and then buying below 120 has to be easily possible with this super aggressive Ishtar sell order. Is this the end? Is this the bottom? Very difficult to say at the moment. I keep being surprised week after week at how much pressure there still exists in the Tech 2 ship market. I think that this keeps an imbalance that eventually CCP will look into because this, I think, makes the power proposition for those Tech 2 ships way too cheap for what they can bring to the market. Yeah, an Ishtar, incredible ship. If you don't have any, if you plan to fly one later down the line, like you want to be a solo explorer for high-sec combat sites, this will do everything. In fact, you can make an all-in-one Ishtar for combat sites in high-sec and then also data sites and relic sites. Super easy to do on the Ishtar. So if I didn't have 5 or 6 of them already, this would be the time to buy them. Next we've got the Kirin, also a bit of a jump. So again, you could have bought close to 10 million in all likeliness. We're up to almost 18 million now for the sellers. They're coming in droves. Look at that, 70 units, 80 units being brought in. Yeah, any jump in price gets spotted and filled very quickly, but smaller frigates, definitely a little bit more volatility here. Manticore seeing the pressure again. Max price is 18.4, buyers 16.5. That's still, you know, I'd love to be a little bit closer to 15 million before we buy. Nemesis all over the place. Look at that. Max price is going up above 15 million. Minimum price is staying well below 15 million. So that's 16.3 to almost 14 million for the buyers. Very interesting, a margin opening up here all of a sudden. So if we look at everything else, oversupply, in my opinion, could be the next play for the Nemesis, and then you get a good opportunity to buy super cheap. It might come, it's not here at the moment, but let's see if this spread that has increased here, what that could indicate, because that's something we don't see that often. We usually get a trend in one or the other directions. Here it's basically pulling up and pulling down in price. Then we get the Nighthawk, 1 year low point, still very flat there, 241 to 221 for a command chip. Same story as an investment. I'd be careful, right? You don't have the volatility of the smaller ships, but shields, missiles, drones, this has it all. If you're looking to eventually grab a Nighthawk, I myself have grabbed one just to be able to have it and fly it. Definitely this is the chart to look at and this is the time to jump on that. The Oneros back below 100 million, yeah, in fact below 90 million for the sellers, 84 million for the buyers. Definitely looks like a buy opportunity. One warning though, the Oneros, very low daily volumes. So being able to sell here is very difficult, right? Even if the price does shoot up, maybe 5-6 ships and we're back down. So it's very difficult. If your horizon is long enough though, then this also is something quite unique, a logistics cruiser well below 100 million. Take 2 on top of that. Purifier seeing a little bit of pressure again as well, buyers below 15, all right. 16 for the sellers and just below 15 for the buyers. Not gonna be easy, definitely more sellers than buyers though, so you might be able to make a good purchase for the Purifier. Then we've got the Rook, pretty much flat below 150, not much to say here. The Saber, after making its way back up to almost 45 million ISK, again interdictor and a destroyer a little bit better, but way too much supply coming in here, and look at those minimum prices dive down to 35 million. We're below 40 for the sellers and at 36 million for the buyers. Yeah, interesting for sure, right? 36 million for the buyers and here sell price at 45 million. Definitely a little bit of a trade to be made here as well, although personally I'd want to go even smaller with the frigates. But this is a sharp drop off, so obviously this one sell opportunity has caused so much supply to come in that they have crashed the price down to the 1 year low point. So you could make a move on trying to buy some Sabres, in my opinion. Then we've got the Scalpel, also back down, right? Same story, went above 20 million ISK, lasted 4 or 5 days. It is a frigate, so that's a sell opportunity. You could have bought these for close to 10 million, maybe 2-3 weeks before that, and then pressure is right back. We're now at 13 million for the sellers, and that's unfortunate. Still a couple of buyers willing to pony up 11.5 million. Get rid of those, try to buy below 10 million. That would be the dream, of course. Doesn't always work out exactly like that. But yeah, a sell opportunity. Early August was here, very pronounced, with a very nice margin, practically double the price from just a couple of weeks before that. So if that to me looks better than the Saber chart. Then we've got the Scimitar, that's touched 100 million. I think some investors came in then, 111 for the sellers, 98 still for the buyers. So I'm not sure what's happening right here. Maybe that we're just too late to buy, right? Last couple of days you can see minimum prices below 100 million, so buyers snagged up Scimitars below that price point, but that may be over as we're starting to head up here at tail end. Unfortunate, so I missed that. We're still on the downtrend, should have pulled the trigger here, but I didn't. Then we've got the Sleipnir. I definitely focused on advanced movements for more investments though over the last week. Then we get the Sleipnir, that's pretty much flat. Not super pronounced 1 year high point. In fact, minimum price is going up slowly. So we're talking 259 to 241. Then next up here is the Vagabond, no man's land. And then the Zarmast, that could be interesting as well. Pretty deep dive below 400 million and able to stay there for the full week. 397 for the sellers, 360 for the buyers. That's a pretty wide gap that opens up here, and so you've got a Triglavian logistics cruiser for 360 million. But my question of course is, why would you buy one of these if you can buy for the same price 3 or 4 Oneros logistics cruisers? To me that doesn't make all that much sense. Again, that value proposition for Tech 2 at the moment, at least for the non-Triglavian ones, is pretty damn crazy. Next up, take 3 ships. First, quick drink. There we go, and we'll take a look at Tech 3 at 48.40. Like that. So one thing I noticed as well in the monthly economic numbers is that the gas volumes, the amount of gas that's being mined, is up substantially. So there is a lot more gas being produced, and I think that's why we're seeing this stabilization and now even pressure in these tactical destroyers. But the question is it enough to maybe bring back volumes, to maybe bring back volatility? And I think my answer there is going to be no, because yeah, Tech 2 is just so low that I don't see why you would invest in tactical destroyers. So confessors are going down below 50 million ISK, 49.5 for the sellers, 42 million for the buyers. It's a really sharp demand drop off. This starts to look pretty juicy, but I personally would be very careful before deciding to jump in. Oh, this is volatile enough to be tradable though, so it's hard to say. Let's see if it's uniform across the board before we make a decision. Here is the Hecate. Average prices staying well above 50. Buyers though, and they're grabbing Hecate as well, going below 50. 54 to 49 million, with the gap opening up due to no demand. Then we've got the Jackdaw. So the same story, bit of pressure, starting to get close to 50 million on a couple of days in the last week, with those minimum prices that are well below 50 and again are triggering people to sell to them. 52 for the sellers, 48 million to the buyers. So here again, these are the sellers and there are no buyers. And then we've got the Zwepel. That's surprisingly flat and stable at 45 million though, and 41 for the buyers. So the Zwepel by far the least popular of these tactical destroyers. Now one thing I find interesting is this drop off, including a very sharp drop off the 5-day moving average for the Confessor. That's pretty impressive. Buyers are just gone and they're coming in at 42 million. There's 20 of them here, so I think it's a little bit too early. But if we can get this to show up in more of these tactical destroyers, maybe the market will become a little bit alive. Be warned though, the volatility is all because demand has evaporated, and so if you're looking to invest, it's pretty risky. Again, for that same reason. While there is more gas being mined, that's probably increasing availability, maybe even putting a bit of pressure on costs in general, not just for the tactical destroyers, but also for the faction ships. I would say that Tech 2 has gone down so much that it's difficult to justify, even here at prices below 50 million, to jump in for a Confessor. But yeah, that's definitely a trend break from the last couple of months. For the cruisers, let's see what's happening here. Is the Legion definitely still seeing pressure. 5-day moving average touching 180, sellers at 182, buyers at 166. So sell opportunity over the last month went here well above 180, 186 probably, something like that. A couple of months ago above 190, and now you're buying well below 170. Yeah, if you're looking for a Legion jumping point, this to me looks to be it. Might even be just too late if you look at the daily averages. Then we've got the Loki, that was in a sell opportunity just last week, above 200 million is, could have bought below 180. We're back at 194 to 189. Yeah, that's in between. We're on the downslope, but it's not enough just yet. Then we've got the Proteus, that's, yeah, not really going anywhere. 182 to 173, not a lot of demand, definitely a cheap Proteus. It's not going to be too easy to actually buy one. You can see that on those minimum prices edging up towards the 180, so you gotta be a little bit aggressive here. Buyers at 173 aren't grabbing a Proteus. Someone coming in maybe 176, 177 is grabbing a Proteus. So it's not the best time to buy for the Proteus at this point, I would say, either. And then the Tengu, definitely a pretty big spread. Averages going back up though, so we're talking 188 to 175. Yeah, you're buying below 180. that's definitely not bad. Not the easiest time to grab one though, although look at the minimum prices, healthily below 180, so it's definitely possible. I would say if you're looking to buy in Tech 3, I would look at the Tengu and I would look at the Legion. But in general, again, same story. Tech 2 being so cheap, why go the Tech 3 route? I would also definitely consider, having a use for what you'll buy, having a plan for the ship that you buy before you jump in. And if you're looking for that absolute investment, I think it's shown here on a lot of these charts. Small Tech 2 frigates, I think, are the best place there for a little bit more volatility. And then finally, we've got the extra products for the week. Let's take a look at the fuel blocks. Could be an interesting gauge for some general activity. 5410. Let's see what's happening here. Helium fuel blocks actually pretty high, losing a little bit of ground at the tail end, but staying above 15k. So definitely the higher price point maintained for over a week in the last 2 for almost 5 months. We're talking 16,000 for the sellers, 14.5 for the buyers. Bit of margin opening up there though. Then we get hydrogen fuel blocks also on the upswing, well above 15,000, 16.6 for the sellers, almost 15,000 for the buyers. So again, bit of margin opening up. You can see that on the min-max prices as well. But on the upswing, that's interesting. Nitrogen fuel blocks, again above 15k as well, above average for the last couple of months, 15.5 to 14.6. And then oxygen fuel blocks also above 15,000. This plateau of 20 days or so, I would say at this point, 15.8 to 14.6, which is, from my perspective, another indication that there's actually decently strong demand for fuel blocks, which means, in my opinion, decently strong demand for industry. I think the focus has to be on large ships, because of what we're seeing in advanced move materials, and then still Tech 2 I think as well is just being massively produced in general. I think with reactions and things like that, it's definitely something to do for a certain type of player. That's the industry focused player, and so fuel blocks are actually doing quite okay. Is this a sign of a little bit more activity in the game? Well, numbers will show that. I still think that it's pretty much up to CCP at this point. They do need to bring some new stuff to the game if they want activity to increase, but summer is over as well. We are in September, and so maybe things will start to turn around there. We'll have to wait and see, of course, but for now, that's it for this EVE Talk. Thank you very much for watching, guys, and as always, I'll see you next time.